So you simply divide all the debt as a proxy for all the money that's been created by all the gold that exists, including all the gold that's in the ground, because gold is indestructible. And then that gives you the true fundamental value of 1 ounce of gold. How much is it really worth? Because this is about inflation. And this is about protecting your purchasing power. So that puts it at somewhere in the vicinity of $40,000 an ounce. So at 3,300, at 3,500, at 10,000, at 20,000, at 30,000, at 39,000, gold is undervalued.
Historical performance shows gold has typically outperformed most financial assets during sovereign debt crises. During the 1970s stagflation period, gold rose approximately 1,500% as concerns about debt and inflation mounted. Seasoned financial analyst Lynette Zang contrasts Wall Street's intrinsic value, based on short-term metrics, with fundamental value, rooted in long-term purpose. She explains that labeling assets like gold or the dollar as undervalued ignores their true role. Zang estimates gold's real value by dividing global debt by all existing and in-ground gold, arriving at $40,000 per ounce. Since 1980, global debt markets have experienced an extraordinary bull run, marked by declining interest rates and increasing government borrowing capacity. This era appears to be coming to a close with dramatic consequences. Major institutional investors are already increasing their gold allocations. Ray Dalio's Bridgewater Associates, for example, recently purchased approximately $315 million in gold ETFs, signaling growing institutional interest in precious metals as portfolio stabilizers. For instance, Zang points out that despite the dollar appearing undervalued, the Fed's own data on purchasing power reveals its fundamental value is effectively zero. On the flip side, she argues that gold remains severely undervalued even at prices like $3,500 or $39,000 because its key function is to preserve purchasing power. Concurrently, Zang warns that a collapse in public confidence will spark a sudden global monetary reset, leading to sharp gold revaluations. While she offers no timeline, she expects it could happen overnight. A U.S. gold revaluation would reshape the global metals market in unprecedented ways. If the U.S. government decides to revalue its gold reserves higher, precious metal prices could surge by 50% or more as markets react to this fundamental shift in monetary policy. Before we dive into Lynette Zang's sharp insights from his latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
I just concluded doing a piece on the difference between intrinsic value, which is Wall Street's interpretation and their formulas, versus fundamental value, which is what I talk about all the time. So I actually think I can answer that much better now, having just concluded a piece. And if you go on stockcharts.com and you put in that 200-day moving average, okay, allowing that, and you can allow it for the dollar, you can allow it for gold, you can allow it for a stock, an index, all of it. It doesn't really matter. But that 200-day moving average is Wall Street's interpretation of intrinsic value. And there's only so far above or below that 200-day moving average that the price action can go. So you can kind of think about it like a water skier on a ship or on a boat, right? There's only so far away, and 10% away would be considered extreme. So with the rapid price rise of gold, well, technically, according to Wall Street, it's overvalued. On the flip side with the dollar, because so much of the world has been turning away from dollars, you see the dollar below its 200-day moving average. So you would say that, wow, look at this, the dollar is undervalued. However, what I look at is fundamental value, because ultimately, and I cannot give you a lot of guarantees, I can guarantee you two things. Number one, I will show up and do the work. And number two, that at some point, all assets, all instruments go to their true fundamental value. And the fundamental value is the most important value, the most important function of that asset. So to know what it is on dollars, Just look at that Federal Reserve purchasing power chart. It's the FRED, F-R-E-D, purchasing power of the consumer dollar. And you will see the Federal Reserve telling you the fundamental value of this is zero, even though right now, technically, it's undervalued because it's below its 200-day moving average. On the flip side of that, at 3,300, at 3,500, etc., gold is severely undervalued because its single most important function, and it's what it's performed for thousands and thousands of years, is to hold your purchasing power intact over time. So how do you know how much gold is really worth? I give you a very simple calculation, right? Money's created from debt. So you take all the debt that's been created in this entire world, which is, I just pulled these numbers, so I don't have it in front of me, but somewhere around $313 trillion. We're not talking about all the derivative bets on top of that, just the actual debt itself. And there's an unlimited amount of this as long as central banks can do this, and they have to grow debt in order to do this. There's an unlimited amount of fiat money that can be created. But in terms of physical gold, there's a finite amount. There's a finite amount of anything, whether it's gold, silver, pottery for mugs, or what, trees. When you get physical, there is always a finite amount. And this is sound money. So fiat money, sound money, flip side to the coin, the money coin. So you simply divide all the debt as a proxy for all the money that's been created by all the gold that exists, including all the gold that's in the ground, because gold is indestructible. And then that gives you the true fundamental value of 1 ounce of gold. How much is it really worth? Because this is about inflation, and this is about protecting your purchasing power. So that puts it at somewhere in the vicinity of $40,000 an ounce. So at 3,300, at 3,500, at 10,000, at 20,000, at 30,000, at 39,000, gold is undervalued. And when all confidence is lost and they're trying to regain your confidence, what do? They take this that's used in one area, and it has no intrinsic or fundamental value. Its fundamental value is zero. And they revalue it against gold money that is all fundamental value as well as intrinsic value, because it's used in every single sector of the global economy. And that, my friends, is when you will see gold start to move toward its fundamental value. Really, we have not yet gotten two things: a complete breakdown of consumer confidence. And in fact, because it's trickled down to the public in the U.S. that the tariffs are off now, right? So the public confidence has gotten better. I mean, but once burned, twice shy. But it is when we see all confidence lost and they go into that first reset. And I'm going to tell you, by that point, that number will be a lot higher. What we aren't going to know until it happens is what multiple of that they're going to do. So in other words, the 40,000 is on a 1-to-1 ratio, amount of money out there versus amount of gold out there, right? However, it might be 2-to-1, it might be 3-to-1. I mean, normal resets are 1,000-to-1. We aren't going to know that until it happens. And then typically we'll have 3 iterations of overnight resets like that before it is near its true fundamental value. However, there are other things that you're going to do in that first reset, second reset, third reset. There are things that you can do to protect yourself and also have the wealth transfer your way. So that is when we will see gold move toward its fundamental value. In terms of these, and by the time that happens, we could be in the trillions of dollars. Just like my $10 trillion Zimbabwe note that I can't buy anything with. It doesn't mean anything. It's just numbers.
Regarding today's financial instability, Lynette Zang explains that gold is regaining its rightful place as a safe haven. While central banks are offloading U.S. treasuries, they continue to aggressively buy gold, signaling a deepening distrust in the system. Zhang warns that the repatriation of gold and silver, even within the United States, reflects a significant shift in monetary confidence and control. Germany's gold reserves stored in the United States have become a renewed topic of debate amid concerns about Donald Trump's return to the White House. Still, any sign that Germany might be considering moving its gold could be seen as a signal of mistrust in the Federal Reserve. That would have broader implications for the financial partnership between the two countries. Moreover, Zhang warns that stable prices don't mean recovery. It's just a pause in inflation. The dollar's lost purchasing power never truly returns. It's a long-term decline. Let's get back to the interview.
I think the realization on a global basis that gold is the only, well, first of all, it is the only financial asset that runs no counterparty risk. But when you're in a sea of discord and confusion and back and forth, well, those typical safe haven assets just don't work. And so gold is again being elevated on the financial stage where it should be, where it absolutely has been for thousands and thousands of years. And I think it's that recognition and that acknowledgement, because global central banks surely have not slowed down their buying of gold. They've slowed down their buying of treasury debt, but they have not slowed down their buying of gold. And that puts us in actually an even more precarious position because, again, if the treasury, the 10-year treasury is what the foundation of the global financial system is, and we're losing support for that system, the volatility was one thing, right? And that's a key thing. You can't tell me that something might not have gotten broken because that makes absolutely no sense at all, especially in the derivative world, which is so opaque. We have no clue. We see a little itty bitty tip of the iceberg, but it's what's underneath that tip that we see. It's what we can't see. That's what's dangerous. And I see developing this consistent doom loop, right? If the treasury underpins the markets and that's eroding the global markets and that's eroding, well, when's it going to collapse? And that's what nobody knows. Well, look at what just recently happened with the repatriation in the US of the physical gold and the physical silver market. You know, central banks know if you don't hold it, you don't own it because they're integral to that system. And so actually, you know, those fat fingers that were taking possession, you know, I'm not necessarily looking at the world as much as what's happening here in the US and the distrust of the US dollar and the acknowledgement, I'll bet maybe not verbal yet, but with the repatriation of all of that gold and all of that silver, gold is the primary monetary metal. I think that there is a huge shift that's going on. And I can't say that it's just foreign buyers. I think that it's a lot of U.S. buyers too, because we're giving up we gave up the contracts. I mean, they're still manipulating the market and buying the gold and silver, you know, futures contracts. But really, who was taking delivery? Right? That's not usually what happens in the US. They just make their money on that spread between the contract, et cetera, moving up. So I'd say that it is within our shores that we've got entities, and JP Morgan would probably know who they are much better than I do. But I think that we've been witnessing gold repatriation, and that changes the whole game. And that's something that when the founding fathers that set up this system, not the original ones that did the Constitution, but the ones that agreed to this fiat money system, they knew that the people could not hope but that these would regain some of that lost purchasing power. And it's kind of interesting because, you know, I have a couple of new people that are part of our production team. And so I always love it when new people come in because they have such a different perspective. They have the man on the street perspective, which frankly, I've been doing this my whole life. I don't really have that perspective anymore. And we were having this conversation with Mimi, and she was talking about how much her rent has exploded. But that's okay because it pulled back a little bit. So it must be getting back to normal. And that's what people think, right? So you have this big inflationary run up. Then that inflation still continues, but slows down a bit, or even the prices, because nothing goes straight up, nothing goes straight down. You got the bounces along the way. So that big, huge run up in rent that we saw has pulled back a little bit. And then people go, okay, the dollar's regaining more of its purchasing power. They don't really say that because they don't understand that, but they'll say something like, so it's getting better. Yeah. I mean, we're getting back to normal, but we aren't back to normal. We are at the end of this massive experiment, and we are shifting into a new digital age. And there's no stopping that. But no, the dollar's not going to regain any purchasing power. Look at the chart. It never, ever does. It doesn't. It might bounce a little bit here and there, but that trend is crystal clear. And when you talk about the spending and the money savings in this country, the spending is still more than what we're taking in. It is massive deficit spending. And there's always this promise that if we do this now, in 10 years, we're going to save so much money. But people's thought process is really short. And that just doesn't happen. But high inflation happens. And then the public comes out and goes, oh, wait a minute. The dollar's not regaining. It's not regaining. No, it never does. All that is a big bag of hopium.
The evidence suggests we may be entering a profound transformation of the global financial system, with significant implications for investors and nations alike. While timing remains uncertain, the structural weaknesses in global debt markets appear increasingly difficult to ignore. The coming years may well demonstrate why gold has endured for thousands of years as the ultimate financial insurance policy during periods of monetary uncertainty, particularly as gold continues to shine through financial chaos. Do you think the world is ready for a monetary system anchored once again in physical gold? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.